The U.S. economy shrank at the fastest rate on record in the second quarter, and estimates for the third quarter are all over the map. Steve Leisman joins us right now. He's got more on this story. And Steve, good to see you.
Good morning, Becky. After the historic GDP plunge in Q2, the CNBC Rapid Update sees economists forecasting an equally historic Q3 surge, but they aren't confident about it, and they're certainly not united about it. Take a look at the numbers. A 5% decline in Q1 and a 32.9% fall in Q2. That leads to the average of 11 economists surveyed look for a 21% Q3 gain. After that, growth is forecast to increase by 7% and 5%. For the full year, GDP is seen declining by 5%. That's all the way on the right-hand part of your screen. But the range is large, almost a 15-point gap from the most optimistic to the most pessimistic. We've never seen anything like this before. The swing factors are what happens with the virus and the debate over government assistance in Washington, whether or not checks are indeed sent. Barclays writes, the July data are a reminder that downside risk remains and that the economy has not yet transitioned to a self-sustaining virtuous cycle of rising household spending, increased production, and gains in employment. For now, the economy remains dependent on policy. Indeed, a strong June number got the third quarter off to a really strong start mathematically. July and August could even be flat and GDP would still grow robustly. But the high-frequency data turned flat to negative, and Goldman beginning to worry about the job market. They wrote this over the weekend, quote, our trackers suggest that current household employment has fallen by roughly 1 million since the June survey week, and that as of July 15th, the unemployment rate had risen back up to 11.5% after falling to 10.5%. That's not the consensus for this Friday, which looks for job growth, but it's a reminder of the potential risks and that the 21% GDP rebound may not be all it appears to be.